or not trending or choppy or whatever. If it's just choppy, we'll try to scalp it. If it starts trending soon, we'll trade that. After about 10:30 today, we'll just review several different futures, the EURFX, the Russell, and the crude oil mini, and whichever one of them shows more trend, whichever one of them seems hot, we'll switch to that. But probably at that time also, I'll switch back there, and I'll let Mark and Denise, I don't know if Dennis is going to be trading, they'll have their front up here. And I'll show you also at around that time, how do I make that determination? Hey, which market should I be focusing on now? Which is giving me the better opportunities? That's pretty easy, but we'll do that a little bit after 10 a.m. Our time here. First thing that I do normally when I boot up my PC and make sure my ticks are refreshed is I just want to take a look at the daily chart, and just to get some perspective on where we might be in the bigger picture. And compress the data here. You just let me turn this into a regular open, high, low, close. Yeah, let me make that a little, make it so you guys can see it, make it a little bolder. And where I think we are right now, it is a little bit of a corrective pattern to a rather weak uptrend. If you look at actually where we are, we've been descending for quite a while, and we had a little bit of a breakout that didn't work here. You can. This breakout was very nice. It looked like we were going to go back to challenge this area here, which would be like that horizontal. See, you can see like that resistance area there, And we still might, but you know what it looks like? It looks like we had a little bit of a failure swing, and because of that, we're inside kind of like an area right now where if you go to a lower time frame to see what's going on in there, it looks really kind of like choppy. And we just dropped below that. This is where we were most of last week. And where we are this morning, we had a nice little drop here. But what I do, what's this? This is just a little piece of market geometry that I do just to give me some perspective on where I am at around the opening of the day, where I'm trading. It's not a real big deal, but if you look at the way this thing is divided, it seems to be catching the peaks here pretty nicely. It's defining the speed of the trend almost. We're catching a few support levels. And let me redraw this and show you, just in case you guys want to do this yourselves at home, just to get some perspective throughout the day on whatever market you're trading. Usually, you'll take the range bar chart that you'll be using, and you'll kind of compress it so you see, the bigger picture. You get like a couple of weeks data in there. Let me just erase it and redraw it. Sorry about that. Wrong study. Erase all. So I use the action-reaction lines, all right? And you have to make sure when you start this that the magnet is off. This is what I do. I just go to the highest high, and I click on the highest high, and I drag it out horizontally. And then I'm going to have to redo that. Let me get rid of that. I didn't do it right because I'm talking, and I'm rushing myself. Let me just be a little more patient here, and I'll drag it out. You know what it is? I can't see the color it's drawing, which is. It's not perfect, but let me give you, since this is just an example, then what I do is I go to the first swing low from here. Of course, if this were reversed, I would go from a low to the first swing high. And I just click here, and what I get is I get these lines going down. And all that these are is the same distance that this is from here to here. It draws a line there and then a line there. And then what I do is I turn the magnet on. I do the exact same study again, action-reaction lines. And you can see I'm just dragging from this high to that low, and I thought I turned the magnet on. Thought I did, and there it is. You can see over here. This is actually, it's not a great, fantastic tool. You can't trade directly from it. But Charles Babson was using this in 1950, and he was using it in the 1960s. This has just been working for over half a century on a fairly regular basis, and it just does a pretty good job of, telling you where we are. And you can see right now we're kind of like stuck on here, and this morning to get again a deeper perspective, the micro perspective that we're going to try to trade. This is where we fell overnight, okay? And when we fell overnight, we landed here, and we've tested here once, and we've tested here a second time, and you can see this time we're bouncing. It looks bearish, doesn't it? Doesn't that look like, you really wouldn't want to be a hero and like buy right here and hope that you get back up here? Because right now it's kind of like, the last it's been up here for 3 range bars and it can't really penetrate it. And each time it penetrates, it's like lower. And you can see our dynamic trio. It's catching, it caught that. That's actually an RB. The first trade setup we covered yesterday, the RB swing line bounce, that's actually that right there. So that probably occurred, what time in the morning? Godforsaken time in the morning did that occur? That occurred at 3:40, all right? So it's okay that we missed it. But, there it is. That's what it looks like. And they might have had another one right there that's very small. And this is 40 ticks here, so even though that looks like it, that's not that big a bounce. Actually, it is. That's $500 a contract between here. So, okay, let's get back to our charts. And, so once I do that, once I get myself a little bit perspective of where I am inside the day, in this format, because this really isn't, a lecture or nothing like that. Anybody wants to say something, ask a question, just yell out. What was that? You have a mechanical device that asks questions for you? Cool. So, where we are right now is actually, this wasn't supporting, this thing is saying, is actually, let me review this with you because this is actually pretty cool. You can say to yourself, over here, the Stoch RSI is rising on your range bars. That's funny because we're in this downtrend, right? But actually it's pretty cool because it's telling you to expect a correction right here. And that's pretty much what you got. And not too much trading inside here would have went very far. You could have scalped in here. But, as the trend is down, as you're below your dynamic trio on your range bars, check out what your Stoch RSI is telling you. It's telling you you're in correction mode right now. So what are you looking for, really? You're looking for the continuation of the downtrend, and that seems to just be getting underway right now, as we're talking. And the Stoch RSI on the range bars is giving you a little hint that that's happening. But the bigger hint, while you're looking at that, is you go to your trade administration screen, which is the volume bars, and you take a look at that. And over here, you wouldn't have felt very comfortable doing that sell unless you were scalping. Now, why am I saying that you would have felt comfortable going for 6 ticks but not using a trailing stop? It's because over here, your Stoch RSI is too high. You're still thinking, I'm in a choppy upwards correction, and I don't know when it's going to end. But the reason you're feeling comfortable scalping is because you're coming off, you're still below that dynamic trio swing line. You're still inside actually a bigger trade set up in the RB swing line bounce. And when you look at your scalping screen, this guy, you see all 3 of your Stoch RSIs falling. So you would feel, comfortable here going for, 6 to 8, maybe 10 ticks max. But you wouldn't use a trailing stop because you're still feeling inside here that you're inside a choppy corrective swing based on this. So over here, you're starting to think to yourself that you definitely don't want to take this, all right? You don't feel comfortable taking this, unless you're kind of scalping, but I wouldn't feel comfortable myself, my own trading, trying to scalp that. And the reason for that is because it's just kind of too obvious to me by eyeballing this that I'm in a downtrend, and I'd rather just scalp in the direction of the trend. However, unfortunately, this would have been a pretty nice trade setup. When we broke over here, now we're starting to get some downward action on our Stoch RSI, downward action here, downward action here. We're below the swing lines here, we're below the swing lines here. Everything you look at says bear, right? I mean, everything. The swing lines, the Stoch RSIs. So, unfortunately, if we would have gotten started maybe 10 minutes earlier, maybe this would have been a really nice sell right around here, But where we are right now is waiting to see what's going to happen here. And what I'm going to do is, I'm going to just make a guess that this is going to penetrate this swing line here within a couple of minutes. And I'm not going to take that buy because I feel I'm being filtered out. I shouldn't, but what I want to do is I want to do the exact same thing that occurred right here. Take the next break of the swing line going down, just like this. These are 2 examples. This occurred 4:30 in the morning, Chicago time. This is 7:20 in the morning, Chicago time. which I guess is what, there's a 1 hour difference between Chicago and here? Yeah. All right, so that's like 6:30 our time then. Any questions about anything that you know you see in here? What's going on?
I just wanted to talk about the trend down and the 3 bars on the range bars that you're looking for to give you the confirmation that your trend is down. I'm assuming that a little, the 4th bar down from that recent swing high, even though the high was a little higher than the 3rd bar, that's, we don't say, oh, we're going to start counting 3 bars again, right?
Where you're at right now, to be honest with you, right here, based on what I'm seeing, is you would just be scalping about 6 to 8 ticks right here, and you wouldn't be using the swing line as a trailing stop right now, because that's Stoch RSI to me. And let's just take a look at the larger period Stoch RSI. The blue one, the one which is over here, you can see it's 30 ticks instead of 20 ticks. And when you look at that, that one actually is supporting selling all the time, all right? So when you do this, because this is a little bit too complex to, you know, we're just starting out, but the way you would actually do this, this is how you know you're in a correction to a downtrend. And this entire time here, you're just taking sell, 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 and you're never taking buy, 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 because your longer time frame is down, and this is showing you, you know, pretty clear it's a correction to a downtrend, and you're just waiting for it to end. But you know, there's several strategies you could have used. You know, placing a sell stop there and waiting for the trend to resume, and that may be happening right now. But this probably was a better strategy. You know, of course, this occurred very early in the morning. There's one sell there, there's another sell there, and now we're kind of waiting to see for this thing to finish its upcycle here, and then when the Stoch RSI, if it gets up around to this area and turns down again, that's what I'll be interested in right now. You know, I'm certainly not interested in being a buyer in no way, shape, or form right now. Was that okay in answering your question? It's again, this is not a mechanical. You know, if you're looking for a mechanical trading system, you're talking to the wrong guy. I do more of a discretionary style. I look at the thing and I make an opinion, but I make an opinion based on pretty specific trading rules, but those trading rules aren't set in stone. There's people out there who, you know, even I think when you look at Mark stuff, it's pretty mechanical, but there's still, okay, this is an area where we have a lot of supported resistance. This is an area where we have a lot of time for a change. I don't really know too many self-supporting traders who do, you know, completely mechanical. It's just one of those things that I just haven't seen in all the years I've been doing this. Yeah, what's going on?
How did you switch over to that blue RSI line?
Yeah. You right-click it and you click on show or do not show. You can toggle it like that.
Okay, and what's the difference between the brown line and the blue line? Is it in the next?
Yeah, the blue line says over here you can see the letter N.
Oh, I see.
And there's the letter O for own. There's the letter N for next. And there's the values for own and next up here in the title bar. So it's pretty interesting watching this, isn't it? You can see that the Stoch RSI is a pretty interesting indicator. Even while you're flat here, you can see that it's rising. It's doing its cycle thing. And over here, we're still pretty, you know, flat, but it's still rising, doing its thing. But in my own trading, because I like to wait for things to be kind of clear, you know, this was using this again. This was pretty clear. So what am I really waiting for right now? And that was pretty nice. You know, you get a break right there. You could have sold right there or waited for the pullback, either one. You know, I'm kind of waiting for this little upward cycle to finish. You know, you can see that, you know, as the ticks change, this current value changes. But, you know, when we get up here again, then we could be setting up for another swing down.
Would you apply Fibonacci expansions on?
Yeah, we'll be doing that in a few seconds. Right now, it's going to be difficult to do Fibonacci expansions. You want to know why? Because of this.
But you don't apply it to volume bars?
Well, yeah, we'll apply them to volume bars in a few minutes. I apply them to kind of both, whichever one's moving better. When volume bars, a lot of times during the day, they'll kind of start getting kind of congested and sideways choppy, and the range bars will give you a better perspective. This thing actually isn't that bad. The reason I'm not that happy with the, you know, you won't maybe get a lot of Fibonacci expansion action on these guys is because it only goes up to a multiple of 3. You know, so you do your first wave, and if that's 10 ticks, the maximum expansion you're going to get is 30 ticks. That's not good. So, you know.
So your first thing in the morning, if you're in a downtrend like this on the volume bars, are you tempted at all to take it, the pullback to that swing line, or you always wait for it to flip?
Well, tempted is something you have to get out of your system real fast. You have to wait for proper clean setups that, you know, make you feel like, hey, this is good, I like this.
But I mean, similar to what we talked about yesterday, where it pulls back to that swing line, and maybe you try to create a breakout.
Here's the break of the swing line. There's the first pullback, okay, and that's occurring. You know, you always got to, you know, this is a good question. I understand it, and I think this will hopefully clarify for you. But over here, you know, you broke your swing line right there, right? And there's your pullback. And look at your Stoch RSI, it's falling. Now look, oh, wow. Look at your pullback over here. The Stoch RSI is rising. That's the big difference. If the Stoch RSI was falling and I'm touching that thing, I'm thinking of scalping or selling, whatever. But not, you know, it's just got to be clean. It's just that simple. There's only a few things on the screen, and this is, you know, yesterday you saw it, you know, maybe for the first time, and I'm talking about it, and now you're seeing it in real time. But again, you know, as the minutes go by, you'll get used to this. There's only a few things on the screen. They just have to line up. That's all this is about. It's no heavy analysis involved here.
Can you talk about your scalping screen a little bit, the lower level?
It's simplicity itself, you know. When everything is falling or everything is rising, and if they're out of sync, you don't do anything.
What is the parameters though on the scalp?
5, 10, 15. This is a plain old price chart. 5, 10, 15.
And the RSI is all next step high?
Of course. Yeah. This is interesting. You know, we're getting up there, aren't we? Isn't that nice? Let's take a look at the, yeah, we're still getting, actually, you know, they're about even, aren't they? They're about even. You know, every few seconds it changes, but in making the decision of trading December or September, if they're about even, I'd rather stick with September. The reason being is we have this data here. If I switch to December, I'm not going to go back as far with data. I only go back about 4 days with data. Which wouldn't be that bad. Actually, now that I'm looking at it, I think this is 9/7. Actually, we would have all of this. We would have all this with the December contract. So that's kind of what I expect. Usually right at around the end of the Stoch RSI rising, usually you get this penetration here like that. Just like you got it here, you know. Here it penetrated, what, about 10 ticks or a little bit more. Here it's going to penetrate, you know, we don't know yet. It's not finished. But then what you're looking for is the repenetration going the other way, back down here, of course, just like that and just like that. And let me verify that we're, yeah, YY, that's what we want. Yes. So when you do this, one of the things I recommend, I don't know if you guys do this at home, you know, I right-click this and I say show values, and then all of a sudden you saw that this popped up here, and I want to do the same thing here. Because if I'm going to be placing my orders around this plus minus X number of ticks, what I want to do is I want to be able to see what that value is, and we can see that the current value for the triple switch is 1.2291. And so now we're covered for knowing what these values are. Any other questions about how I got this set up and what we're waiting for? And
What did you click to show values?
yeah, you right click on the name of the indicator, and you say, it's a toggle. Now you don't see them, now you see them. You just right click the name of the indicator. Or you can you know, make this the active chart, go into indicators, click on triple switch, you know, double click it, and you can see over here where it says show values over here at the bottom. And you can go over here for dynamic trio. Just why don't we take a look at the dynamic trio? Let me get out of here. You know, you want to do a couple of things here. You want this one to be a Y. Actually, on my range bars, I want that to be a 3, so that's just, at home I got that set as a 3. And wait for close, no, you don't want that. You want an N for wait for close. Because, intraday, it doesn't have any meaning. Daily chart it does, but intraday doesn't. And show values is right there. So when you do that, you can see over here, now it's a little bit more reflective of the chop that was, occurring here. So this pattern right there is that pattern right there. So on the range bars, that's pretty choppy. It's interesting. On the range bars, it's pretty choppy. Over here, it's actually pretty tradable. But it's tradable as a scalp, you see. If you tried to use a swing line to trade this, this one would have given you some money, but yeah, actually both of them would have. But it's not that safe. A lot of times what you do when you're in scalp mode and you start using these swing lines as a profit objective, you'll find that you're entering and exiting almost at the same price. These ones were pretty quick, but okay. So right now these things have flipped. So right now you can actually say to yourself, you know what? Just placing a sell on a stop 2 ticks below that value at 1.2287 would fulfill this, because if price went from here to 2 ticks below here, I would have my Stochastic RSI going above, going to around here, and my Stochastic RSI would be pointing down, while this is now pointing down, and these are pointing down, and we're all below the swing line. So, that's simple, right? No, it's almost like I don't want to say it's a no-brainer, but this is simple stuff. So we'll be doing a few examples of this. If I'm wrong, let's say that, let me just tell you what's going on inside my head. Let's say I'm totally wrong, and this is a false breakout, and price is going to go back and trade in here. Well, I'll never get filled. And I don't have anything telling me to buy right now, right? But I have things setting up for me to sell. So in this trading setup that I'm going to do, if price goes down here, I'm going to get filled, and maybe we'll get another swing down like these. If price never gets down here, I won't get filled, no loss. So let's review that scenario. Let's say this really isn't just a correction to a downswing. Let's say this was the final swing down. Well, you know what will happen? Over the space of maybe less than a half hour, my Stochastic RSI will start turning up, these guys will turn up, and then I'll start being a buyer I'll start doing buy setups instead of sell setups. But for the moment, let's get this guy ready. So we want to go to the September contract. We want to put in a sell on a, we want to put in a sell on a stop limit. Actually, you know what? To make this easier on me for putting it in, let me just, we want to do it at 87. Now at home I use more the book. This has a book, but when I'm training people or when I'm in front of a group like this, it's easier for you guys to see what I'm doing. Then I'll change this to a stop limit. So what that means is when price reaches this level, 12287, this becomes a market order. Actually, because this is Globex, it becomes a limit order. But you get filled right away. So with interactive brokers, this blue tells me, the blue over here tells me that it accepted the order, and the second that if price reaches this, it'll turn to green, and I'll be filled, because it's Globex electronic, I'll get filled instantly. For later on, what I put up here just before, this is what we have the stock. We'll be looking at stock indexes later too. I've got the Russell, the Dow Jones Industrial, the SP index, and the NASDAQ index. Once I get to them, I just like to see how they're all moving together.
So you continually move that limit up?
That's correct. That's correct. This thing is changing right now. So basically at home, in a system like this that you're looking at, unlike some of the other stuff you're going to be seeing, the trading methodology during the day is different. And the difference is that you're primarily an administrator. This is very simple for a full-time day trader. This is a very simple screen layout. And what you're really doing is, and this is what I always tell people, and I remind them of this during the trading day, is that you're really more of an administrator than an analyst. You know, so when the day started, I was kind of like an analyst for a few minutes. I'm looking at my daily chart, I'm doing my action-reaction lines, I'm reviewing everything, but then kind of like, okay, now I've done that, that's over. Now it's actually, to be honest with you, it's actually a little bit boring. Now primarily you're just waiting and following the system as an administrator. So just like this gentleman said, you know, it's time for me to change my sell on limit to, I want to go 3 ticks below the swing line, so I'm going to make it 89. And when I do that, if I go up here to 89, didn't change that one, did it? Sometimes it changes both of them for me. So now notice that this changed to a T. It recognized that I changed the order, so I have to retransmit it. It's thinking, it accepted it. So now if price goes down to 89, we'll be filled. But here's the nice part. You know, actually the whole thing is playing out just like you've seen. Let me compress this so it's easier to see for everybody. Doesn't this look almost like a mirror image of, you know, prices going down, the swing line, the Stochastic RSI is going up, so price goes up. You catch the nice swing. You don't know how big see, this correction to the downtrend was choppy. This one's nice and smooth. And this one is a little bit starting to look a little bit more like this stuff, a little choppy. Maybe it'll end up looking like this. We don't know. Somebody could say to me, Yuri, well, you know, you could have scalped this. Why don't you, because the Stochastic RSI, when it broke the swing line, why don't you scalp that? Because I don't know if I'm going to get this or I'm going to get this. It's never safe trading against the 2 intraday trends. You've got an own period and you've got a next period. And when I look at, let me show you, when I look at this, I see that on my Stochastic RSIs, I'm down on both of them, all right? So both of my intraday trend filters are saying down. And I definitely don't want to be a buyer. It's too dangerous. If this is going to be a reversal, if this is the end, if this, where we are right now, is the end of this downswing, what would our expectation be? Our expectation would be that this swing line right here, right at around this value, will contain price. It'll consolidate here for a bit, and then we'll start getting a swing up. If we see that, then we'll start thinking maybe we should be scalping buys, but we want to get confirmation from here, and we'll also want to see these 3 guys rising here. But as it stands right now, we don't have that, right? As it stands right now, the safe thing to do is just patiently wait to see if we get filled going south. Let me, just in case we get filled right away, what's this low over here? This low is 84. I mean, the Stochastic RSI is a nice indicator. You got to see, this thing doesn't really measure price the way relative strength index or MACD or stochastics or all the other stuff. Notice that price is really just screwing around, and because this thing is really more measuring the type of cycle you're in, it's still rising. So that's pretty nice. It's telling you, you know what? Right around now, you're ending the period where you would expect this corrective swing to the downswings to be ending. So let's see if that happens. Well, it's like this. If price were to get down and fill me down here, this Stochastic RSI would start going down. Another way of, yeah, it's basically it. That's basically, that's.
It's not like it's a really major reversal.
Well, I think you don't really need a whole lot of technical information or analysts or advisors telling you that you're in a downtrend right now. Well, Carlos is.
The reason I ask is because my RSI looks different from yours. Not much, but a little different.
Now, are you doing RSI or stochastic RSI?
I'm using stochastic RSI.
Are you using N12? A 12 period? You should see it right on your screen right here. All you got, it's right there, displayed right there, 12.
How do you get that displayed? Because mine does not.
I don't think I should be. Could somebody possibly help him who knows Fibonacci Trader, please? So, you know, right now it looks like the way we placed our stop on a limit's pretty good, because it looks at the moment that the swing line, you know, you always have to give it a tick or two variance, right? So right now, the market really does look like it's beginning to consolidate. So we don't have any reason to suspect right now that we should be buyers. But if the market were to, let's say, in a half hour be up here, it's doing the correct thing. It's consolidating. It's got a little pivot here, and it's consolidating on a swing line. I'm still hoping that we get one more swing down. Does everybody kind of follow my train of reasoning? You know, everybody's comfortable with that? Okay. Would everybody be okay if I just ran back there and got a little coffee? Because I only had a teensy little cup here, and that's not enough.
Since the range bars over size still down, you're going to trade this as a trend trade, not a scalp.
Well, now that we're beginning to, that's a good question. Richard's question was, hey, you know, if you were to get filled now, would you be more willing to trade it as a trend trade going down as opposed to a scalp? So let's review this. The reason these guys here were scalps over here was because your Stochastic RSI was pretty high up and choppy, right? But right now we're kind of developing a swing going down. This is pretty interesting analysis, isn't it? And because let's face it, if this was the final swing down, that's exactly what I would expect to see happen. I would expect to see this dynamic trio swing line. It's been acting as support now a couple of times. So let's see what's happening. It looks like you know, a traditional chartist would call this base building, consolidation or base building. But still kind of short. And the base building doesn't really start here. It really started here. Look what happened when price got down here. They only found people who bought. Profit takers, buyers. You know, so that's interesting. So right now, we've been in almost a half hour of building from about this bar here, 6:48 our time. But at home, you know, let's say you guys are home. I just want to make sure that while we're waiting for the next trade to build up, you know, that you're comfortable with the fact that, you know, this would have been a fairly easy sell, this would have been a fairly easy sell, and that right now you understand the strategy that I'm deploying. You know, we started, we missed this one by not even 10 minutes. I figure 6 minutes we missed that by. That's a shame.
Do you have the divergences turned on that chart?
For volume bars, they're really unreliable. And we'll turn them on for the range bars, because they can be pretty reliable here. But you know what bothers me? I'll show you exactly what bothers me. I don't like this kind of choppy stuff that I see here. So right now, I wouldn't trust too many of the arrows. Oops, sorry, wrong place. Let me check the parameters here. So paints it so we can see it. And you know, I don't really want to. I wish there was a way to make them all one color with one keystroke, but there's not. No, cancel. Regular red. Okay. And now I'll turn it on, and we'll see if we got anything up here telling us to, I don't know, I got to edit that parameter again. That's really ugly. That's just ugly. We don't want to see show on indicator, show on bars. We don't want to see that. So actually, some of these up here you can see were pretty decent, right? I mean, that's cute. That's nice. That's sweet. That's awesome. That's lovely. But right now where we are, you know, actually again, it's not that bad. It's not that bad. But you know, you're going to get better divergence arrows when you have fairly clean swings. When you start getting a chop and I see a divergence arrow, I don't feel I missed anything because you're kind of like in a choppy period. Boy, I needed that coffee. Wow. That's embarrassing.
So on your downswing, like the one that occurred earlier, is there any rule of thumb as far as the second wave is usually the strongest impulse, or it usually exhausts after?
You're definitely talking to the wrong guy.
I don't mean
Yeah. I haven't, but yeah, but that's too close to Elliott wave. I just have this, unfortunately, this bad reaction to that. It's like an allergy or something. When people start talking strength of waves, so you use the word impulse wave, and that's pure Elliott wave. So yeah, you're right. You know what I do what Robert Fisher does. There's only a few traders out there that I think who are trying to educate the public who really have their act together, and Robert Fisher is one of them. And you know, he's one of these guys who actually apologized to the public in one of his books because he used to teach Elliott wave. So what he does now is he uses just the ABC wave, because markets, and when you think about what's really an ABC wave, you know, we may be getting one right now. A, B, and if this takes this high out, then we know we've got a little bit more of a corrective reversal going up to here, because that'll be an ABC wave. We had an ABC wave right here, you know, A, B, C, and that's as far as I take it. I don't do 5 waves. I don't, hey, am I in wave 2 or wave 4? If wave 2 looked like it was an ABC, then wave 4 will be a 1, 2, 3, 4, 5. I know all the Elliott wave rules, and I don't use them.
Since we have that ABC formation, should we?
Well, right now you don't. You won't have an ABC formation in here unless you take that high out.
I meant further up.
Oh, further up here.
Yeah, I was
A, B, C, yeah.
maybe we should plot some expansion lines.
Expansion lines. Oh, Fibonacci prices, okay. Well, that's a good question. It's the fall down here. This rapid decline up there is going to make it a little difficult. And let me show you what I'm talking about while we're waiting.
I was wondering if we were coming up against a cluster.
Yeah, I hear you. See, I would really want to draw my Fibonacci expansion lines from here. And I don't really have a very good wave 1 here. That's the problem. I would go from here to here, and that's kind of sucky, you know. Yeah, no. But I can do one thing here that I see. Well, it's even worse than I thought. Holy shit. It's terrible. But let's just see what we get, just for fun, because we're waiting on that thing to resolve itself. Where are they? Where is it? Where is it? There it is. Magnets on it. Let's just see if it reaches. And let me just enable the, boy, that's not the way I have it set up at home. I don't really want to see these internal ones. I start with 1.0. Then, and I'll save this so when we use it later on and for other markets, you know, today and tomorrow, I won't have to redo this. I'll save it as the default 2.62. 3.0. Unfortunately, 3.0 is as high as this thing goes. Yeah, it's just not fair. And let me just get the colors. I don't really like color kaleidoscopes. Is there a way to? No, there isn't. I know this seems petty, but when you do this hour after hour, day after day, I try to keep the strain on my eyes a little lower. So this is the 2.0 expansion down there. Let's see how far 3.0. Yeah, you know, 3.0 actually was right this bounce here. You can see we made a stab at it, missed it by a couple of ticks. We hit it right there. Oh, it's 2.62. Actually, we stopped right on the 3.0, didn't we? Within a couple of ticks. Okay. Well, in that case, we should be able to go back there and do the other band. We should be able to go back there and do the... It doesn't show me the...
You needed to check on that.
Yeah. I probably got, you know, because I do it as a default at home, I probably got used to that. So we need to do the... There we go. And... didn't I have a... Should have gotten filled there. No. Well, on the bid-ask spread, no, you know, because it's at 89 now. Well, actually, I should have got. I am filled, and the way this thing is set up. So let me focus. Why isn't it showing me? Position. There we go. And unrealized P&L. So we'll see what's going on. Much better. So we're short one contract, and we're flat right now. Oh my God, I'm losing 1250. Oh, thank God I'm at break even. So, you know, obviously the first thing you want to do is you want to go back here and take a look at the swing line and place an intelligent looking stop loss. God forbid that I would be wrong, right? But, so I usually go right now I'll just go one tick below this because I normally go 5 ticks below. I see my low here. You can see that it's 2284. So I'm going to place a buy stop. I'm sorry. We're selling short. I apologize. I need to drink more of that coffee. I want to go 5 ticks above this range right here. Why am I doing that? My swing line hasn't flipped yet. Normally I would take my swing line value and subtract. In this case, because I'm short, I'd add a few ticks. Because my swing line hasn't flipped yet, I just take a look at the most recent pivot, and I'm going to add a couple of ticks to that. And that would put it at, you know, 22.99. So let's do that. And stop limit on a buy. Yeah, that's exactly what I want. And it accepted it. The blue color means that that order's in. And so what do we do now? You know, hopefully we're going to get some follow through. And if we don't get any follow through, we've got our stop loss in the market. But we're also going to do a third thing. We're going to do a time management stop right here. You know, if I don't see any price action in about 10 minutes, normally what I do, and I didn't do it, is I write down the time. We got filled at about 9:21. We got filled at 89. I'm going to wait till about 9:27, 9:28, and if price is still what I call just playing around in this range, I'm just going to get out. There's no follow through, and we have evidence right now of there appears to be a consolidation pattern going on. This is different than what we saw. Excuse me. Let me show you. This is a little bit different than this stuff here. This was choppy going up then down, it only went up above here. But right now we're kind of, you can see that we're spending a lot of time from here to here. We're consolidating. So, my confidence in, hey, are we going to get another swing down? I don't feel as confident. I'm still going with the trend. It's still copacetic right now. But in about 6, 7, 8 minutes, it won't be as copacetic. Because you made another stab down, and here's what I'm thinking. In about 6, 7, 8 minutes, I'm going to see this as a pivot. So I'll have one pivot here and another pivot here. And what would that argue for? That would argue for this stuff being taken out very soon. And what I wanted to do was, let's just go down here. No, go up here. Go up, go up. Where's my other 3? I don't know where that other fib expansion line went. We should have about 2, 3 expansion lines right around here. But this move down, you can actually see that these fib expansion lines are pretty cool. You can't trade them directly, but the 2.62 stopped them. I don't use the 3.8. I don't use 2.5. I just use the whole numbers and the 6.2. All right. So it's 1.0, 1.622, 2.623, and then you have to stop because it doesn't go any higher. Yes.
The 1.272 is usually a pretty good target, or 1.698 in that range, but you don't have.
I like that for time. When I do time expansions on daily charts, market geometry, or sometimes on the Euro USD, I'll do.
Just leaving at the 618.
Yeah, 1.0, 1.62. The only time that I'll go to 1.27, like you said, is if the extension is really big. If wave 1 is huge and the rest of the move is huge, because then the difference between 1 and 1.62 could be 50, 60 ticks, and so at that point I'll do that. But in this move here, and we've got a market that is consolidating, and I'm starting to just get that tingling sensation, consolidation, reversal patterns. Let me go in here. Let me make this a little bit easier to see. Why does it look like this? I know why. I know why. Ugh. Excuse me. Delete this. Delete. Yeah, delete. These guys actually that I use, 1.0, 1.62, they actually do. If you notice, it actually consolidated, and it's consolidating between these lines. Here's what I don't like to do. I don't like to draw too many lines in a chart. You know why? Because then you become a hindsight analyst and you confuse yourself. If you draw enough lines in a chart, I guarantee you one of them will act as the high of a pivot, another will act as the low of a pivot, and then when you try to reproduce it in the future, you're going to try to remember, was that the 1.38 or the 2.27, or I just keep it simple. And if you look at it, this is what I've been using for years, the 1.62, 2, 2.62. Even, this unfolded overnight, no curve fitting, no optimizing, and it's doing a pretty good job of catching the support resistance levels. So if any of the veteran traders here could call the CME and ask them to speed this up, that would be appropriate. The other thing that lets me get a feeling that we may have bottomed here, in addition to the Fibonacci, in addition to the consolidation, if you look at the rate at which price is changing, it's not a big thing, but if you notice right now, there's absolutely no momentum going up or down, and you're in a downtrend. Now, if you're in a downtrend, you have absolutely no momentum going down, and you're consolidating. That lets you know, that's what the old-fashioned chartists from years back, they used to call that accumulation. If it was a low, if it was on a high, they'd call it distribution. They're really pretty similar in the futures markets. That's really stock talk, where people tend to buy rather than short in stocks. In futures, accumulation, distribution, not that much of a difference. So let's see if that tick that high there holds for a minute and we're in a range. 29, 30, and 21. So we should be flat there. So that got executed. So our first setup didn't really go the way we wanted it to, but you know, we kind of understood what's going on, and now we're having a little bit of a feel that, you know, this here is the beginning of, you know, possibly a reversal to the overnight, rather strong, rather quick downtrend. While we're waiting for the next setup to occur, let's go back to the daily chart and see if there's anything there that lets us know that we should have been expecting, you know, just like we saw on the volume bars, we saw, you know, this was the, you know, could have been the end of one wave, and this is the end of another wave. Let's see if we can do the same thing on the daily chart. And no, you're not going to be able to see that on a daily chart. Because in a daily chart, we're in the middle of this schlock right here. Let me just take a look at, excuse me just a second. I won't be able to do it here, will I? No. I want to do this so you guys can see it, because right now I don't think it's visible in the back. The utilities, define global settings. I think a crosshair color is right there. Let me just make it a bright color so it stands out. There you go. If we look at where we are, let's see. We stopped right there. Yeah, there's a little bit. Yeah, you can see there's kind of like support levels right there. You know, I wouldn't do Fibonacci anything on a daily chart with this, but yeah, that's a support level. Okay. Carlos, do you have a regular Forex your USD feed in here? No, no problem, no problem. I just wanted to compare it. Yeah, but I don't want to. Yeah, if they can't see, everybody else can't see it. It doesn't matter if I see it. Come on, there we go. Let's see what the stochastic on the next period, stochastic RSI in the next period is doing. It's actually starting. It actually bottomed. So we've got a divergence pattern there. It actually bottomed right here, and on this low, it actually was a little bit higher, not much. So that's another indication that we may be entering a reversal stage right here. I bet if I turn divergences on right here, now we don't have it yet. Maybe it's waiting for that bar to finish before, but we should have an arrow right there. Maybe when that bar finishes, but you can see that this pivot and this pivot's lower than that pivot. The Stoch RSI is lower here and higher. That's a pretty classic divergence. There's one thing, for people who would be scalping this right now as opposed to waiting for a longer term setup. We can see by looking at this band. You know what, I want to see if we can, let me just give me another minute here. Let me save this as a default and, hold on, invert, show baselines, extend show values. Why isn't it showing that? Anyway, let me do a save as default. And I'm going to draw another set of Fibonacci bands in a minute. Just like price stopped here on a band and it stopped here on a band, if price went to right around this area and started to form a pivot, and this Stoch RSI started to go down, and these guys, especially this red one, tops and starts to go down, you would have probably a very good quality scalp there. It's not something that you saw on the slideshow yesterday, but that would be something I'd look at. Because you also know it would attract attention from other day traders, because what they would be looking at is that pivot right there. Support tends to become resistance. That's pretty standard to most chartists. So that would be something we would be looking at. We can actually see that that value is 0.4. We've touched 0.0, and what I would be looking for is, like just 0.1. As a matter of fact, let's take a look at what this low is right there. That low is 0.2. Okay, so a sell right at about 0.2 really wouldn't be that bad an idea. You would probably be inside, you probably have a stop loss set of only about 4 ticks, and you'd have a pretty high probability setup if we were to reach that. As a matter of fact, I'm kind of itching to do that almost. I would almost be willing to place a sell on a stock. That's a pretty high probability. I don't see any evidence of this market screaming north right now by the rate it's changing. So this looks like a market that's consolidating, and that just A, B, C. C, I'm hoping is going to finish there. So why don't I do that? Why don't I place a sell stop at 0.2? Well, that would just be a plain old sell on a limit at 0.2. Let's do that. And we'll patiently wait. Does anybody have any questions about why I did that? This is actually, this is actually your time, not mine. I'm trading one contract at a time at home. I trade multiples of 2. When I'm training somebody or I'm doing things in front of a group, I just do one contract, and the reason is because I talk too much, and sometimes I make mistakes. So if I make a mistake, I just want to do a mistake with one contract instead of 2. I'm not a professional speaker. I'm actually at home. Tech Hedge, my company, started June of last year. Prior to that, I was trading at home, pretty much doing nothing besides raising my daughter and my dogs for 12 years. So speaking in front of the public isn't that natural to me. But anyway, does anybody have any questions about what I'm doing right now, the next setup that I'm looking for, any of that stuff? Okay.
Is that scalp trade that you're setting up for related to your lower left chart? That doesn't really fit, doesn't it? You got that Stoke RSI.
Yeah, you know what it is? This is one of those scalp trades that I should have just gotten filled right now, and I should be short right now. And I'm only going to let me place my stop loss, and then I'll answer your question. So I want to, where are you? There you are. I want to do 12. I'll start with 1207 on a stop limit.
Why do you stop limits if this stops?
Well, because in the literature that Globex puts out, they don't accept stop orders. Globex does not accept stops. They accept stop limits only. Now what IB does, the interactive brokers, what they do, because they got tired of this stuff, they have a little bit of logic in their interface. If you put in a stop, they'll change, and it's Globex, they'll change it to a stop limit for you. Because they got tired of people putting in their stops and watching them not get filled and being accosted by traders saying, I put my order in, and they're saying, no, Globex doesn't accept stops, That's why. That would be a bad question for me to answer now, wouldn't it? I mean, I'm not big on political correctness, but a little bit of common sense,
Oh, got you. You're next on the range bars, the next scope.
Mm-hmm.
It's pointing up, and you're in the cell right now.
You know what? I'm glad you asked that question, but the answer is really simple. When you're scalping something, your range bar next is irrelevant. It's just irrelevant. It's covering a ground of that you're just not trading. You're just not trading that stuff right now. So we don't want to look at that. What I know right now is that I'm hitting a resistance area with my Stokes hitting their tops. And if I'm wrong right now, it's because this is a full-fledged reversal. If this isn't a full-fledged reversal, this market should be finishing its A, B, C right at a very logical area. I got two things going for me. I got a pivot right there, I got my fib level right there, and my Stokes hit the ceiling in a downtrend. If I were in a, let's say my Stoke RSI was down here, it can go along here a long time because I'm in a downtrend, but this is contra trend, so I give that a little bit more weight. So again, this is not something that I have written up for everybody to get. You guys are supposed to be watching, what am I supposed to be doing? I'm supposed to be doing exactly what I do at home. That's what I'm supposed to be doing. You're supposed to be just watching what I do, and I'm supposed to be explaining what I do. So some of the things I do don't really work as well when I write them up, because this would be a good thing to talk about when we have slower periods. When you're a discretionary trader, what you're really doing is you're kind of like being a jury in a court trial, where you're weighing the balance of the evidence. There sometimes is no clear cut, even though you were told, it's got to be beyond the shadow of a doubt. There's always doubt. Nothing's ever that crystal clear and copacetic. So what are you doing? You're just weighing the balance of the evidence.
Do you put a resting limit order for your target?
Well, I was going to ask you guys that. What should I do now?
Do what you normally do.
I don't know what I'm talking. I don't talk at home all the time. Yeah. There, I'm out. The reason I'm getting out here, let me tell you why I'm getting out. It's because I'm scalping. That was a 7-tick profit, right? And I'm right at that swing line. Okay? I just want to make sure you guys understand what I just did. Because I'm pretty confident this is a consolidation pattern. I just felt that was a resistance. And my goal was to trade back to the swing line. Because right now I'm in a state where I would have to say, I don't know. I have to wait for my next setup. But what would be my next setup? My next setup would be the swing line flipping, this going down, and then I could trade going south again. All right? But I don't know if this swing line held here, if it held here. I don't know if I'm in a consolidation reversal right now, or if I'm in an area where this downtrend is going to reverse and take this out. So I have to, I finish my scalp trade and I start my next level of analysis. And we were one tick away from this swing line flipping. Okay, Richard, were you asking me a question when I did that? Did I answer you? I don't remember.
No, I asked you if you normally put a resting limit order for your target.
Yeah, my target was the swing line, and it got there while we were talking. So that. Your swing line plus minus 2 ticks, and that's the volatility factor in using such a short time frame. That's the market noise element that we're dealing with. So we're still just 2 ticks below it. Oh, stupid. There we go. There we go. So now let me do, here's what I want to do. I want to place a cell right at around, let's see if we get, no, I got that there. Excuse me. Let me go back to 91. Yeah, that's what I want to do. At home, chances are, what would I normally, I was talking, right? Normally what you guys should do, you probably won't be talking to a bunch of people at home when you're trading, right? What you would have done is you would have taken your swing line value, subtracted 3 ticks, and placed the sell stop there, all right? That's what you do at home. And while I was planning to do that, the market fell. I was getting ready to do that, and I missed it by 3 seconds because I got a big mouth. So why did I place a sell at 91? Because that would be a pullback. Right now the pullback would be 94 because our swing lines flipped. So I missed that, But again, I want to make sure that you guys understand that at home, you wouldn't be gabbing and talking and analyzing. You would be looking at this. When price got back down to here, you would place a sell and a stop 3 ticks below the value of that swing line, and you would be sitting on your a little profit right now. What's the danger here? The danger here is you're going to double bottom. That's your risk. Could I answer any questions about this for anybody?
seminars and stuff, selling into a support level like that, you know, some people would say it's stupid to do that. And I'm just wondering-
Ignorance is bliss sometimes.
Yeah, I'm just, you know, to me, it's like, well, it could be a support level or it could not be a support level. I was wondering if you ever considered.
You can't, that's like leading yourself into analysis paralysis. I mean, really, when you're in a trending market, what happens? Support levels get broken. You're in a downtrend. I mean, that's the nature of, that's almost like the definition of a downtrend. Lower lows, lower highs.
Almost like you're
Yeah, so you
trend trading.
yeah, because basically, you know, I mean, I can do this. I can set up little Elliott wave patterns here. I can set up market geometry patterns here. I can set up Fibonacci retracements, expansions, and we can talk ourselves out of every possible trade setup ever, because there's always going to be one factor that's arguing the opposite cause. So right now, pullback. No. No. They've rejected. Let's look at this. You got two possibilities here. Actually, sell at 91. Let's change that to 91. Then I want to give you the if-then-else scenario that I normally do in my head when I do this. Right now, I feel comfortable for the next couple of minutes placing a sell at the swing line. That would be a pullback. You know, from what you're remembering yesterday, that would be you broke the swing line. Ideally, we should have sold right at about 89. And right now, though, I'm selling on a pullback. Why? Because I got this, and this is nice. But in the back of my mind, I'm doing an if-then-else scenario. I always do kind of like an if-then-else scenario. I would say to myself, okay, you're interested in selling. Is there any reason at all, Yuri, that you would be interested in being a buyer here? Well, I got this little double bottom here. I got a consolidation pattern here. But I'm looking at one other thing, too. You know, didn't it seem like the market rejected this area really quickly? Right? I mean, when it got up here, it rejected quickly. But if you look at how much time was spent trading up here and how much time was spent trading down here from this rectangle, only a few seconds have been spent trading down here. About a half hour has been spent trading up here. That's information. That means the market is accepting trading up here, and it is not accepting trading down here. So for, like, you know, Ron will tell you about market profile. He, you know, in an auction theory or market profile, and I'm not big on this. That's information that's valuable for you to use in your scalping type analysis, or in your making a decision that a reversal pattern may be forming. And the way you would play that is you would look at this swing line and place add a couple of ticks and place a buy stop there. Because if that auction theory analysis is correct, we're going to go back up here and challenge this quickly. And I should be filled right now. Why doesn't it make an alarm sound for me? So what I'm going to do is, first thing I got to do is place my stop loss, because that's the right thing to do. And we'll do that 95. On a stop limit. That didn't take. Stop limit. So how there it is. So we sold one at 91. And where's price now? It's at 90. Wow. Why is it doing? Why does it make sense? So, any ideas what I should do with this? I mean, I set my stop loss. What the heck do I do with this thing now? Play. Well, there you go. Use your time stop. That's a good one. If price screws around here for another few minutes, I'm in trouble, because that means I'm still back in base. Actually, let's do this the right way. I don't mean to be sarcastic. If price were to start trading here right now for a few minutes, what information is the market telling me? I'll be able to draw a rectangle around this, and I say, Yuri, there's no momentum in this market. You are in a range market. You want to be a buyer here. You want to be a seller here, because you're in a range market. All right. That's how the analysis would look 10, 15 minutes from now. It doesn't look like that right now. Right now, I'm still below all my swing lines, Stochar RSI down, Stochar RSI down, the scalping Stochar RSI down. And you know, there I am, my gigantic 4-tick profit. But that's the analysis, the way this works. In a few minutes, if it goes back down here and starts to slowly crawl up, then I'm really going to get out. I mean, I'm saying, you know, forget about trying to trade for lower lows. It's clearly telling me this is it. This is it for, you know, maybe another hour or so. We're not going to make it go any lower. I don't know if what I said was clear enough. Let me rephrase what I said. There's two things arguing, you know, against the trade I'm in right now. There's one thing arguing for it, the main trend and the Stochar RSIs. What's arguing against me? A potential double bottom and the fact that the market is rejecting trading in this area. If you take a look, it started to go into this area once again, right? And look how quickly it came out of it. It is kind of almost waving a red flag in your face that, you know what, you can't even be a buyer here because I'm not going to go there again. So based on that, you know, I'm going to take a look at if this swing line, actually my stop loss is in the market, so I'm covered, but it looks right now that, okay, I'm out. So that analysis is correct, and right now we're looking right now that this really is, we have all the information we need to feel that we do have a reversal pattern in place. So there's our flip. There's our flip. So our swing lines just flipped, and now with that pattern, you know, we're in a mode right now where you can't use your swing line as a trailing stop because right now what I would argue is that this thing is starting to go sideways choppy again, just like here. And it's doing it at you know, the mid-range, and we're in a range market right now. Okay, so you're kind of in scalper heaven right now. And the last trade I just did proved it, because that trade was copacetic, and the fact that the market rejected it is clear evidence that we're either in one of two things. We're in a reversal pattern, or we're going to be in a range market. You know, you can draw a rectangle around here. All right. Any questions on that? All right, cool.
How do you draw a rectangle?
I take this red thing and I go like, you know, like that. There's my rectangle.
I just can't figure out how to do it in this trade.
Yeah, I know. Metastock had a really nice rectangle, huh? Yeah, I used that for years. Yeah. You know what's really bad about that last trade? As I was talking at home, I would have gotten out at 89 because when it was screwing around right here, that's when it hit me. Hey, you know what? That rejection there was so fast that I knew it was over. But you know, instead of getting out, I had to relay the information, and that's how quickly it shot up. So you know, but that's all right, no problem. One contract, not a big deal. But the main thing is that you understand my logic. You know, I may be a little slow on the efficiency because I'm gabbing, but I want to make sure you guys at home understand the logic I'm using, because this may sound complex. It really isn't. This is really pretty simple. Okay, while I'm waiting for a little better resolution, you know, okay, Yuri, what are you waiting for right now? There's a couple of things. You might want to be a buyer again right over here, or you can place a buy and a stop above here. Because if you trade here, there's two things you got going for you. You got this double bottom. You've also got, if price goes above this pivot and this fib expansion line, then that would prove that this is a reversal pattern. What would you have going against you? You would have going against you these Stokes. But I want to show you something. I have a feeling, a gut feeling, excuse me, that if I were to show this, we're starting to rise. See like how the larger period, Stochar RSI, you know, it's kind of telling you something. Your red is telling you, I don't know what's going on. This isn't clear. So your red is telling you, I don't know what's going on. And your blue is telling you to expect a reversal pattern. So we're going to leave that up here right now because right now my red, see how clean these swings are? But unfortunately, you see like that, and that when that happens, you want to use caution and be a scalper, all right? And when you see these clean things, when you're in the middle of these clean swings, that's when you want to, maybe trade an extra contract, use the trailing stop method. I think, again, those people who are familiar with market profile, if you were to market profile this, you got the fat part right there, and we just bounced off that. You know what I'm saying? There's the fat part of your market profile for those people who are familiar with it right there, and you just went within a tick of it. So we'll see. But markets always work on an if-then-else scenario. Here's the analogy I have in my mind, that they're always doing a probe, and that probe will return the answer of the if-then-else. The if-then-else that is going on right now is that based on this market in a few minutes should be challenging this. What if, 6, 7, 8 minutes from now, it can't challenge this? Then inside our if-then-else scenario, we're switching from then to else. The then part of the if-then-else scenario is we should be at least equaling this. And if in a few minutes we can't, what information is the market telling you? Failed intraday rally, there really is no momentum here. And this is a rectangle range market, and we're going to be challenging this, in 15 minutes. The markets always work on an if-then-else scenario. Where traders get into trouble is if they only do an if-then and forget about the else. Then you get married to your position, you forget to put your stop loss in. You're thinking, I'm going with the trend, and all you're doing is selling, and every sell gets stopped out, 3 minutes later, So right now, the range market scenario is really looking, unfortunately, I would much rather have a nice trending market. It's like if we could magically shift the time, wouldn't this have been wonderful? But it's not as good a learning experience. What if we started trading, right over here? We would have had one beautiful sell, another beautiful sell. We would have scalped the loss here, scalped the win there, and everybody would have thought, this is fantastic. But actually, you know what? This is allowing me to give you more of that information that when you're at home, you're able to utilize for when markets are in their ugly periods, which is, this is starting to look a little ugly. I mean, if you look at this, that's ugly. It's ugly. So, in a way, that's good for education purposes. It's not good for trading, but it's good for education purposes. A trader like myself would wait for price to get around here and then do a quick evaluation, all right? Do I want to place a buy stop up here, or do I want to sell on the range going back down here? And this market didn't really even come close, right? I mean, it missed it by 4 ticks. And that's exactly the middle. If you were to do a 50% of this range, you're there right now. That's not good. It sure is. Yeah, the width of the volume bars is telling me information, and what it's telling me is that this was done on incredibly low volume, so it'll reverse. And unfortunately, the upswing was done on incredibly low volume, so it'll reverse. So if you're a micro scalper, while I'm talking to you, I can't do that. At home, do I ever become a scalper that scalps for 4 ticks? I sure do, but I can't do it here because I can't do that and talk at the same time. But yeah, when I saw this, right when price got to about here, I would have taken my 2-tick profit and reversed and gone up to about, right about here. I would have just taken a 4-tick profit, and then when price dipped below here, I would have sold, again. So why am I doing that? It's because I'm seeing, since these are volume bars, that when you fall like this, there's absolutely no momentum there, okay? Same thing here. There was no momentum here. So, this bar is trying, there we go. This bar is trying to resolve that. So right now, actually, you would expect this market, a buy on a stop right now, I've got reason to believe that we're in a reversal pattern. But take a look. Let's look at the bigger picture. Let's go to our range bar chart, and let's take a look at this dynamic trio line right here. This dynamic trio line, it's got some play in it. So I'm not saying, unlike a volume bar where I can do a +2, -2 to it and get a range of volatility, at this higher time frame of the range bar, 2 ticks isn't enough. You can actually, add 5 and subtract 5 here to get a range of volatility. And you can actually see that that's true, but how much does it usually penetrate here? So right now, placing a buy stop 2 ticks above that high is starting to look really inviting if this is a reversal pattern. And that high was 04. So why don't we place a buy and a stop at 06 and see what happens. If this is a range market, we won't get filled. And if it's a reversal pattern, we probably will get filled, and we'll be able to ride it a little higher. So let's place a buy stop there. Now, while I'm doing that, let's take a look at a scenario for, some people may disagree with my analysis, or they may say, you know what, your analysis is true if you get to that price. But what if you don't get to that price? How would I know that we're really in a range market like you were saying a few minutes ago, and we might be going back down to this level? Good question. The way I would do that, again, is I would look at my scalping screens. Right now, I don't feel comfortable selling right at the moment. I would feel more comfortable being a seller in a range market, because actually that's when do oscillators work the best inside range markets? When do they work the worst inside screaming trending markets, all right? So if I'm in a range market, I'm kind of hoping that this guy gets up here, and if price is still up here, then I'll be happy to sell it down to here, scalping. But right now, I don't have that comfort level for just saying, hey, right now, the way this looks, I felt more comfortable placing a buy stop there.
That sounds like you're going back and using that stochastic as an overbought, oversold.
In a range market, that's acceptable. In a range market.
Except I thought that you had said that really didn't work that way on volume.
On the setup that we called the VB-RB cycle trade, that was specific to that setup, and it was also specific to the first setup, because those are trades where you're patiently waiting for a setup where you're going to use a trailing stop and you're going for a larger profit. And that's correct. And the way you do that is by looking at the trend. Now, when you look at this Stochar, do you see any clear trend there? You don't. So since you don't see any clear trend, you've reverted to a scalper. And once you go into a scalp mode, and once you identify your range, then you can go back to the traditional, yeah. Okay. It's funny that the September and December contracts pretty much have the same volume today. So it looks like, this is a little bit of a problem, because with the stock indexes, you have a clearly defined rollover day where, everybody switches on the same day. With the 6C, you don't. So let's do something for fun, all right? When I go into scalp mode like this, and I think you kind of, I'm sure most of you would agree that even if you're betting on a breakout, this sure looks like a range market with clearly defined boundaries defined by these fib levels right here. One of the things I might do is bring up a tick chart instead of this volume bar chart, because when you go into a range market like this, your volume tends to dry up. A lot of those bigger players who wait for, let me say this another way. A lot of the bigger players are waiting for a breakout, and they're not trading this, all right? So who's trading this right now? Scalpers. I'm not the only one who noticed that I have a range. So I bet you've got different strategies here for playing breakouts. But a tick chart might help you scalp a little bit better. So well, I'm going to create the type of tick chart that I would use at home, and we'll see what kind of information that's given us. And what I like to do, what's the Fibonacci number in the 100s? It's 144. Now I'm going to key in, don't think that this is heresy. I'm going to key in 133 instead of 144. And for my next period, the Fibonacci number would be 233, but I'm going to key in 255. And I'll talk about that in a moment. Just let me finish the chart. And it's kind of like heresy, right? It's kind of like the demigods, the Fibonacci demigods will be on me soon. And what kind of, yeah, I'll apply my, let me apply a template to this. I should have a Yuri, yeah, Yuri VB is what I want. I like Fibonacci a whole lot. I'm not talking about the sort, I'm talking about the Fibonacci number sequence. But Fibonacci is really just one thing. It's really a growth pattern. And some of the things, I've seen people look at a 20-period moving average and say, that's wrong. You're supposed to use a 21-period moving average because that's the Fibonacci number. And then you plot your 21 and 20 side by side and see that they're identical. Fibonacci is really a growth sequence pattern. And I don't really adhere to the idea or theory that using 55 or 89 or 144 is really a big deal. But one thing I do know from experience is that in any market that is day traded, there are traders who are using the Fibonacci numbers for tick charts. So to get a slightly faster entry, I just drop it a little bit from 144 to 133. And because I want my next period to act kind of as a trend filter when I'm scalping, I make it a little higher, which makes the Stochar RSI there a little bit smoother. So the next thing I have to do, I'm going to kind of show you Yuri's scalp setup at home when he's convinced that a market is scalping. Right off the bat, let's do this. Hey, Yuri, how does this thing perform? Let's just look at the last few minutes. You can see that the Stochar RSI reads a little bit better, right? It's more in tune with the market. You can also see that the swing lines here are a little bit, you could not have, you can scalp with the benefit of pretending this is the VB RB cycle trade, all right? But instead of going to an RB chart, you're going to go to the next period Stochar RSI right on this tick chart. So let's put that on, and let me show you how that works. Ideally, when I train people and stuff, I don't really want people to be scalpers. It's not a fun way to live. It's better waiting for the markets or trending like they were earlier this morning when all your Stokes line up. But if I were to do that here, what would that mean? That would mean I'd be on break, right? And people would get really unhappy. So I'm going to show you, when I do decide to scalp, what do you do? But ideally,
You have that up there twice.
yeah, I know. Why do I do that?
RSI.
I know. Why did I do that? So here's my next.
You need to go back to the chart.
Oh, it's just color. That's owned, and that's correct. All right. No, actually, it's okay. Let me show you. I just forgot to change the color.
14 or
There you go, 12. Thank you. No, I'm glad you did that because I do talk too much, and it does kind of affect my attention. So you can use this thing, and when you get the swing line breaks here, you go for your small scalps. There's a scalp that was nice. Here's a scalp that was pretty nice. There's a scalp that's nice. Let me, I'm sorry. I don't think you guys can see this in the back, so let me change once again let me change that to make it really stand out. All I did was change the crush. I have a feeling that, what happened there? Are we still getting data? Yeah, we are, good. Okay, false alarm. You know, you can kind of, like whenever you get your 3-tick penetration on your swing line, you can go for maybe, you know, you're in a range market right now. You got to be very careful. You know, you just go for like 4 to 6 ticks max, you know. But it's pretty reliable, right? There's one trade that worked. Here's one trade that didn't work. One trade that worked. One trade that worked. One trade that worked. And now we got 2 ticks below it, but not 3. So on your VB chart, it's not sensitive enough to do that type of scalping, all right? It's configured more for trading swings, intraday swings. If you're going to revert to, very short-term scalper, you would, do something like this. But this is something that I want to share with you. If you're a self-directed at-home trader, it is perfectly 100% acceptable to say to yourself, you know what, I don't want to be a scalper, because you work very hard for small amounts of money, and because you're focused on the micro focus, what normally happens to scalpers is when you start to get really good quality swings up and down like this, you got 5 ticks here, and then you're out. And you're wondering, why didn't I get 25 ticks? Well, it's because your attention was micro-focused. So what a lot of more experienced traders do is they completely skip scalping, and they just wait for clear copacetic trade setups to occur, which occurred this morning using our time here in Mountain Time around 4:30, and then again right before 6:30. There were a couple of copacetic, each one was over 20 ticks. And now you're looking at this and you're saying to yourself, you know what, I'm looking at, and again, very simple analysis, this really doesn't look clean, this is choppy. I'm taking a break until everything lines up again, okay? Yeah?
When we do scalping from this tick chart,
Yeah?
are we still looking at the range bar?
No.
Stochastic?
No. No. You know why? Because the range bar is a time period, a time frame which is too big.
Okay, stochastic, we just disregard that.
Yeah.
Direction.
Exactly. Because look, let's do it another way, because I want to make sure that you understand where I'm coming from. This is not just my opinion. You've got a range bar there which is 20 ticks. You're scalping 4 to 6 ticks.
But we still need to look at that, the scalping, 3 stochastics RSI on
Yeah.
10, 15. Do we need to confirm the directions of those stochastics?
I only do that when they're all going in the exact same direction. Like, as a matter of fact, they are right now. Like, while I'm doing this, right, I actually have a trade order in the market. I've got everything rising here. I've got this rising on my range bar chart. I'm starting to get my blue line showing a reversal pattern, So I've got, a buy stop in the market that I'm hoping that if the market, hits that, I get follow through. And it's not just one of those, crappy little whipsaw thingies.
So you're looking at the range.
But for scalping purposes right now, you really wouldn't want to scalp short right now. Because I tell you, I'll be honest with you, I do understand that, the vast bulk of people who range trade, they're telling you this is the best place to sell. Your stop loss is really small. You've got a range. But you know what? If price goes down here and penetrates that, you're virtually guaranteed you're going to get down here, all right? And this right now, yeah, you got a small stop loss, but you also probably got a very high percentage of getting that stop loss getting hit if you were to sell right here. Just look at this. I mean, this, the market's like waving a red flag on your face. I ain't going here again. It traded here, half a minute. It traded here half a minute. It traded here now for almost a full hour. So what's the market trying to tell you? I really, really, really want to go back up here.
Why did you use a tick chart instead of cutting your volume bar in half like 400 feet?
I don't know. I really, you know why? Because I know when you're scalping, what are you doing? You're playing a game not against professional traders or market makers. You're playing a game against other scalpers intraday, all right? And I know what they're doing. I know that they're using tick charts. I know that. And I got this sneaky little setup there to just, on the swing line part and on the bar part, I'm a little bit faster. And on the Stoic RSI, I'm a little bit slower to smooth it, Just a little game that I play. Yeah. Now, most scalpers, to be honest with you, they go down to 89, 55, there's so much market noise there, I don't want to touch it. Just ain't going to do it. Okay, I'm filled. Yay, hooray. And 98 would be my stop loss.
That's two below the swing line, is that where you get the?
Well, yeah, it was actually 01, yeah. Right now, yeah, I'm going to leave it at 98, and I'm going to adjust it. So stop limit, yeah, just want to make sure the order's correct. So, as a matter of fact, if you know what I'm going to do, I'm going to change this. I'm going to make this 97, and if price gets there, you know what I want to do? I want to reverse. Because if price gets, this is what I was talking about yesterday. If price were to get there, you know, in the next 2-3 minutes, what does that mean? You know, that means that this was a, just like this was rejected quickly, and that gets rejected quickly, that means that the people who are playing a breakout couldn't maintain the market. They couldn't maintain the momentum, and we really are in a range market, and that's what's called a false breakout. Now you have to use time to make that analysis. All right, so I got filled at 10:17, and I'm going to let that stay till 10:22. If you come down here very quickly, that confirms this is a false breakout. It confirms this is a range market, and the next most logical thing for it to do would be to go down here. So let's see if that swing line, you know, we'll see. Right now it's starting to look like a false breakout, no momentum type market. Yep, there we go. So this is starting to look depressing, you know. So let's just so we don't let that influence our psychology. Let's just get rid of that. We're in training mode right now anyway. So let's take a look at where we can take this. But anyway, you know, at least you're following my kind of like logic in doing this. And, you know, because I'm dealing with the limit market here, let's place a buy at about right in this area right here, which looks like 88. So let's place a buy right at, you know, a buy limit at 88. So let me just see where I got filled. I got filled at 97. So I got filled at 97. We're bid asking, so you know, one tick there. What was your question?
Why did you select 88? 2 ticks above that.
Well, what I'm doing is I'm scalping, right? And I'm range trading right now. I'm range trading. So that's right along the lower part of this range. It's right by my Fibonacci line. Well, okay, the question could be asked, hey, how come you don't place a buy 1 tick above there? Well, because this market's told me it doesn't really want to trade there. And since I'm scalping and not trend trading, I don't want to be a hero. You know, I don't want my opinions to sway all this stuff. Right now it looks to me like if this is a range market, they're going to go back down here. And if they take this out, that's nice. We'll set up another trade.
Since it's a little slow right now, can you tell why you've gone back to dynamic trio for the range bar?
Yeah, you know what, I don't have a stop loss in for this guy, and you know, I just realized that as I was gabbing, because Yuri's bad habits. So let me, and right now, let's see, if I got filled at 97, I'm going to say that if price goes 4 ticks above that swing, I'm going to put it at a 1, and I'm probably going to get stopped out again. This market right now really doesn't look friendly, does it? So let's do a buy at 02 on a stop limit. So now I'm bracketed. Now I can talk. The difference is that fast point is fantastic on markets that trend almost all the time. But it's just like the name says, it's a little bit too fast, which makes it more amenable for getting whipsawed. Dynamic trio is just a little slower. If you were to compare, let's say Fibonacci Trader's high-low activator, that thing gets whipsawed a lot, and you should only use that when you know you're in a clear trend. Whatever indicators you're using to say, I am in trend mode, you know, high-low is cool. But if you try using high-low activator in a market that's even just a little choppy, you know, you're going to get whipsawed. So dynamic trio is one of our more slower, more conservative, let's say, and high-low activators at the exact opposite. And fast point is just below the middle. And triple switch is just above the middle. It's closer to dynamic trio. So for trade administration, I like triple switch. I think it's perfect. For range bars, which I use for trend determination, I think you should go conservative. And that's why I switched to dynamic trio.
And on the scalping, you're using the switch also.
Yeah, yeah. And we'll look at that screen now. Right? Yeah, it's not a bad idea. So over here, where'd it go? Whoa, hold on. Where'd it go? Here's my tick chart. There it is. Let's take a look, so this is, oh boy, that's my range bar chart. I'm sorry. Where did my, one of them is the, nope, it's not you. F1's not doing it for me. Well, I think we found it. So for, if you, I'm doing way too much talking. If you were, we bought the breakout here. It only traded there for a few seconds. That's really, okay, why did you sell? I sold right in here, right around. You could also be a seller again in here. But if you're looking at this, in hindsight analysis, assuming at home you're not talking away to your friends like, I'm trying to talk and trade at the same time here, you can actually see that you've got a few, pullbacks for scalping purposes, pullbacks. And, your last pullback, if you were going for 4 to 6 ticks, you would have gotten it, okay? But over here now, what are you doing? I'm playing the range. See how my swing line flipped? You could have waited to sell right there. There's your trailing stop. This thing is so sensitive at this tick chart level that you can actually scalp with it as if you were trend trading, It's just that everything moves faster and has smaller values. But if you follow this along, you can actually see that this really isn't that bad for scalping. If you're in trend mode, what's going to happen? You only, let's say your personality, and my best trading friend supports himself doing nothing but scalping the Russell. And believe it or not, he goes for 3-4 ticks. He won't even go for 6 ticks. He averages between 25, he averages about 25 trades a day. And he just goes for 3-4 ticks. But he always makes the determination. If I'm in range mode, he actually, I got him using this right now. He switched from his method to this. And the other thing he does, if he's in trend mode, he still trades, but he just trades in the direction of the trend. And he uses every pullback to this line in the trend. So let's say the Russell is doing its famous, $250 a contract move in 20 minutes. Inside there, you have to be, trigger happy, but inside there, it's doing numerous pullbacks like this. It's going up 8 ticks, down 4 ticks, touching the swing line. He buys, he gets that over here. It goes up, it comes back, touches the swing line. He buys, he gets his, 4 to, shit, he doesn't do 5. He does 3 or 4 ticks. He gets his 4 ticks. He gets out, waits for the next. I cannot do that because I would have a nervous breakdown.
What would be the risk ratio then? How you would put the stop loss?
There you go. I'm glad you asked that question. When you're a scalper like this, here's what happens. I learned this from Larry Williams. I did a little bit of software development for him in the late 80s. And, in the few minutes he talked to a peasant such as myself back then, he had no choice. He had to tell me what to do, right? So, what he told me was that when he's in scalp mode, his winning percentage is around 85%. But in Larry's world, his stop is actually 2.5 times his profit objective. So if he's going for 8 ticks, he's got a 10-tick stop loss. What my friend does, he's going for 4 ticks on average. His stop loss is 4 ticks below the swing line, which I may have gotten filled there. Let's see. Okay, so at least, I had a, pardon the bad language, but I did have a crappy, you guys understood my logic, but it didn't work. And, let's see if we got filled south side. Yeah, we did. So, I lost a few ticks there. I made a few ticks back. And When you're in scalp mode, here's what you have to make sure of. Your winning percentage has to be over 60, 65%. You can't, when you're a swing trader, even intraday, you can get by with around a 55 to 60% winning percentage. You know, because if you look at the trades setups that I was showing yesterday, the ones that occurred this morning, you're getting 20, 25 ticks profit, and your initial stop loss is 5, 6 ticks. That's a really nice ratio. But when you're scalping, you can't do that. Your initial stop loss is going to be pretty much equal to your profit objective. Once you go into a profit of maybe 3, 4 ticks, you can make it break even, all right? But the bottom line is you can't scalp with the 2-tick stop loss. People do, I know they do, but it's a lousy way to live. It really is. You know, you end up with winning percentages of 50%, and your average win over your average loss, if your stop loss is smaller than your profit objective, is maybe going to be 1.5 times. You know, and you're going to do a tremendous amount of work to make $100 a day. It ain't worth it. It ain't worth it. So it looks like I picked my level pretty good. You know, we were talking about, that the market's rejecting trading down here, and I don't have an immediate expectation to go down here again. So what are we doing now? We actually might be waiting. You know, just look at your Stochastic RSI. If all you did from this point on is trade the Stochastic RSI, well, from this point on, you know, you had a couple of whipsaws, profit, 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 and now we're waiting for this thing to bottom again, all right, and turn up, and this swing line's going to fall down here. Let's get, I'm sorry, I should have the value up, that's my mistake. Show values. All right, so if we're convinced right now that we're in a range trading mode in this market, it's not going to accept higher highs or lower lows, and we're in scalp mode, we're kind of waiting for some bottoming action here. And we're going to use that swing line to see if we can swing back up here pretty soon. There's another more conservative way of doing this. Okay, that's the way I do it. You know, my blue line here, there are some traders who will use something like this, and they will make the following determination. I will only be a seller if this red line is falling. I'm going to patiently wait until I get my first lower value here. Now let's take a look at that. Let's just walk through this and see how that would have worked. You know, there's you wait for the first lower value there. You would be a seller right inside this blue bar here, but you have a much higher probability trade. If you were to wait for the first upturn here, that would be at the close of this bar, and you would be a buyer in here. And even though it worked in hindsight, I'm afraid you would have gotten stopped out there, so it didn't really work very well. Let's go over here. First time you get a lower value is right there, so you have your high probability sell right inside this bar. And again, you're going for 5, 6 ticks. You know, so that one worked. This one worked after it stopped you out, and this one worked very, very well. You know, so that's just another way if you want to be a scalper inside a range market and not have that hyperphrenic feeling of looking at the ticks painting in and figuring out what they're going to do next, which is the downfall of most scalpers. You know, if you want to adopt some trading rules, that's the conservative way of doing it. The liberal way of doing it is to completely ignore this blue line and to simply trade in direction of the Stochastic RSI, waiting for the swing line to get penetrated by a few ticks. All right? So that's Yuri's big scalping system.
Conservative ways to go only in the direction of the trade.
Yeah, let me show it to you, because that is important, because it depends on how your nervous system is faring. Yeah, I don't really feel like selling that breakout, because that's why I don't feel like selling the breakout. Because I think the market told me over here what it's going to do. It's going to run stops, and there's no momentum here and all that. What you do is, let's say you're in a down pattern here. You wait for the first downturn right there. So you'd be a seller here. That didn't work. But if you do it over here, the first downturn is here. You'd be entering right at the open of this bar. And that worked really good. You would be a buyer right at the close of that bar. You would be buying here. And I don't really know if you got stopped out there. I really don't know if you got stopped there. It only penetrated the swing line by 1 tick. All right, so maybe you exited the trade, maybe you didn't. If you stayed in the trade, you got your profit. The first time the blue line went down from this point, that's the first bar it went down. You would be a seller inside this bar, and that worked very, very well. Yeah, that's the conservative way to do it for people who don't have the trigger happy fingers.
What's the blue line?
Oh, the blue line is simply the next period, and the next period here is defined as a tick of 255. The red is the own, which is a tick of 133. I'm playing heresy with the Fibonacci numbers here.
Yuri, for money-wise, when you're scalping, do you cut your size or increase your size or keep it the same?
2 contracts max because I'm not a natural-born scalper. I do this if I'm feeling clear and happy and energetic and everything, and I'm convinced I'm in a range market. But more than half the time, when I'm in a market like this, I will switch to another market, or I will stop trading. Basically, if I were home right now, I would not be trading the EuroFX, and I would be focusing on the Russell, because I don't like this. Now, if the Russell were totally brain dead, I'd do an evaluation of which of these 2 markets has a more clearly defined range. 9 times out of 10, it's the EuroFX, because the Russell doesn't like clearly defined ranges very long. It's low-cap stocks, doesn't take much activity on the NYSE to move them, so it doesn't maintain its ranges very well. The Euro, on the other hand, is the largest market in the world. All sorts of people all over the world trade this, and when it goes into a range, it maintains that range for a while. So, if you're a hyperphrenic scalper, you may have decided to be a buyer right here. And I'd rather just watch this for a while because one of my concerns here is that this market doesn't seem to have too much momentum right now. Let's take a look at some information the market gave us in hindsight. You had a breakout here with good momentum that failed very quickly, and you had a breakout here with not particularly good momentum, but it was going with the overall trend of the past day and a half, and it didn't work. So what information is the market telling you? The bigger players are definitely not playing either long or short. All right? So once you've got that information, you know who you're trading against. You're trading against people like me and you. Now, I'm going to use myself not to offend anybody. We're stupid. We don't really know the economic factors and supply and demand inside this market. We're doing our best with indicators. We're applying statistics to a nonlinear data stream. Do you really want to be a trader against other people doing the same thing, So, you know what? Would anybody object if we took a look at the stock indexes now? All right, kick ass. I have to remember I'm not at home right now. And let's do this so we can scroll back to it. Yeah, we'll just put up the other screens over these. Yeah, that's something that I was talking about with my friends that I just can't believe. Usually the stock indexes go brain dead in August, and the currencies are still fine. We had the exact reversal this year, where the stock indexes were wonderful in August, and the currency was just a chop. It was a horrible chop the entire month of August, and it just seems to be coming out of it. Even though the Euro FX right now seems to suck, earlier this morning, it gave several beautiful trade setups. We just, started. We missed by like 4 minutes. Yeah, you would have had 50 ticks. You would have had 50 ticks on one contract. Let me do this. I'm talking too much. New York Stock Exchange, default settings, real time, the Russell. That's just right. I want the Russell index. Actually, if you guys would want to take a 5 to 10 minute break, you know, that would be a good time to use the restroom, get a drink or something. It's going to take me maybe 5, 6 minutes to set everything up, and then we'll come back and we'll be looking at this market for a few hours. Russell index. Because I also have to refresh the data. And we'll be checking the EURFX also while we're looking at this. You know, I'll be staying with that until at least 10:30 our time, probably closer to 11. How do you do?
Good, how you doing?
Always a pleasure.
Nice to meet you.
Thank you.
You know what, there is an official day for the rollover in the currencies. It's tomorrow. It's always the Tuesday after the indexes
Okay.
rollover. So the reason why it's equal today is because the day traders are trading SEP, the position traders are trading DECE. But tomorrow you'll see it flip or
Yeah, I know. Yeah. No, I figured that tomorrow on December. Yeah.
It's always the Tuesday.
Yeah.
after
As a matter of fact, before I even started this morning, I set up all the December charts.
Good, that's what we'll be. I like it.
Thank you. I'm patiently waiting for this thing to update here. You know what? While I'm waiting, I'm going to change its template. I should take this. Ah, hold on. I don't want that there. I do not want this there. Get this out of here. Get it out. Get it out.
Yuri, do you do other currencies, like if euro doesn't go, maybe you look at yen or British pound?
No, I don't do that.
Oh, you just do?
Yeah. You know why? Because if the Euro USD is flat, you're not. Most of the other currencies that have the US dollar in it are also going to be flat. And I'd rather go to the stock indexes. I mean, hey, you know, this ain't that bad. Ooh, shit. Oh, this is sweet. Oh, yeah, this is nice. Oh, I wish we would have switched here earlier, huh? Ooh, ah. Ooh. Yeah, I think we're going to have a little bit more fun here. Horrible. It's horrible. Yeah, it looks good. Wow. Boy, just by looking at this EURFX, aren't you glad you're not screwing around with this right now? Wow. Yeah, there's no momentum in that market right now, so it's a, you know, it's, I don't think it's going to go flat too long, so I'm pretty sure we'll be monitoring it over the next hour or two, but tomorrow morning, I have a feeling, you know, we'll have a much nicer day, because this is obviously, you know, what they, you know, a chartist calls this, this could be the beginning of a diamond, which is a big reversal pattern, or it's just a widening, ascending triangle, triangle in reverse, where you